Bitcoin finally takes out 70K as traders front-run the US election, and Trump's victory odds make new highs. Implied vol pumps higher, pricing in around a 7% move on the day. And upside calls surprisingly don't catch much of a bid, suggesting option traders expect the rally to be short-lived. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran from Options Insight. I've got my man Dave in the studio from FRNT, and we're finally breaking out, mate.
Breaking out. Shh, don't ruin it. Don't spoil it.
No, exactly. Quiet. All right, so last week we did a hoodie giveaway again. The winner was at ZPotato7923. Congratulations. Up there in cold Scotland, buddy. Hopefully that hoodie's going to keep you warm as you trade throughout the winter months. And speaking of winter months, Deribit is taking registrations for their winter trading competition. And they've once again teamed up with SignalPlus. If you register by the 4th of November, you'll be eligible for the election options giveaway. And then just generally, the prize pool this year is a whopping 200,000 USDC. Lots of other goodies up for grabs like iPhones, Thailand giveaways, or getaway, sorry. And that'll be over a month-long competition. And the link to sign up to that is in the video description. All right, guys, with that, let's talk markets. So macro, we know the macro is good.
Yep.
We are now starting to front run a Trump win by the looks of it, because, you know, we said last week's episode, is the Trump trade still crypto? Certainly feels like it right now.
Yeah, it does. Yeah, it's been interesting. I mean, certainly the bond market is pricing this Trump trade, Trump win, and Bitcoin starting to kind of catch on. I think we've spoken about the fact that I feel the market's underpositioned in a way, just risk generally, which makes sense, obviously, into the election. But if you're underweight, you know, say you're in your fund that's benchmarked against Bitcoin and it starts to break out, you have to kind of just start reweighting higher. You can't just sit back and wait for the election. But it feels obviously like Trump's odds are growing and the market's starting to react to that. I think also what's perhaps interesting with it is we've discussed this asymmetry in terms of, you know, if, you know, obviously Trump wins, it's the bigger upside story. If Kamala wins, then it's kind of status quo, and then we can kind of get back to the macro. I guess the bigger risk with Kamala winning is if there was to be a blue sweep and then she can do all the crazy stuff that she wants to do. But I think the more that Trump's odds grow, and I mean, he is kind of looking like he's going to take it, but although some would say it's still a coin toss, but the odds of a blue sweep and them controlling, you know, that Congress is greatly reduced. So I kind of feel now people are a little bit playing catch up and need to start strapping on risk. So, I mean, we probably have a noisy few days ahead into
we've got mega cap tech earnings this week.
Yeah.
So that's going to kind of set the tone for equities. Yeah. Right.
Yeah.
From what I'm seeing, you know, it looks like there's not as stretched positioning in tech as there has been in previous quarters going into earnings. And you know what these mega cap tech names are like, right? They're just cash cows, right? They just print money for fun. So it may be that a few of these names want to have a little breakout as well. And that would be a positive kind of risk sentiment that may help drive just general risk and Bitcoin as well.
Yeah, I mean, and no one's going to want to be underweight tech when Trump's in with Elon Musk by his side, right? So,
well, Tesla was up 20% on earnings last week, right? It's huge.
So some big moves. The bond move's a bit like interesting. I feel like I'm getting this wrong on the bond side, but I'm still quite bullish bonds. I know Druckenmiller and some heavyweights are kind of bearish. I still think like there's been a few things going on. Obviously, like it's part of a Trump trade, and people associate Trump with this reflation trade, and perhaps more inflationary as well. We've had huge amounts of treasury issuance over the last sort of few weeks as well. So that's probably weighing. And then I just think it's been you know, the Fed cut rates, and you've had this reflation trade going on because we've had a little bit of a better run on data. Obviously, China are you know, kind
Well,
of
they've got
coming in with
commodities going, haven't they?
bazooka. Yeah, so everyone's kind of playing this reflation trade, which I think is premature. I mean, just last week you had like the lead economic indicators out of the US that are hitting like the lowest levels since like 2016. You had the beige book, which the Fed pay a lot of attention to, basically showing little to no growth across the US, no inflation concerns. So if you think a few weeks ago everyone was playing this recession trade, and I kind of downplayed that to say there's no signs of like a deep recession, this Goldilocks slowing but not collapsing growth, I still think we're in that. So I think this reflation trade will kind of get faded out quite quickly. Obviously, non-farm payroll on Friday, that's going to be quite important to that.
But wasn't there some news about China announcing a potential fiscal number in like a huge number in
so 8th November.
That's like next Friday.
Yeah, it's the Reuters were reporting from sources that 10 trillion yuan's going to be the number.
That's bigger than we had thought, no?
Yeah, I mean, depends where but yeah, it's big. It's a big number.
Yeah, if they deliver that number, the markets like it, right?
And with the potential, they've said, to do more should Trump come in. And Trump,
because he's going to slap tariffs on them.
Exactly, yeah.
Right.
So it kind of adds to the positive momentum that a Trump presidency gives to this global liquidity story.
That's interesting.
But I kind of felt yesterday that, you know, yields are breaking out. At some point, if it becomes disorderly, it becomes a problem. And you see like the MOVE index going up, and
that's very index, pumped. Interest rate vol is very pumped. Yeah.
Yeah. So interest rate vol as measured by the MOVE. Yeah. Yeah. But that's kind of negative for liquidity as well, because then it kind of reduces or increases like the amount of collateral, like treasury-based collateral you need to borrow.
Right.
So
but I think that's a temporary phenomenon.
It's
like
temporary,
the MOVE index being so elevated, because I think people are just scared of a 30 basis point move in yields on Trump or Kamala or whatever. And so that's why it's up there. But every cross asset vol is pumped right now.
Yeah.
So after the election, it's all going to come down.
Yeah. Yeah.
And so that will be like a liquidity sort of release as well, right? Where you should see a bit of it.
And I think like just again, like we keep talking about liquidity. Liquidity is looking, and the outlook for Q4 just still looks like amazing. We had the Treasury sort of borrowing announcements yesterday, which are kind of in line with what they were looking at back in July. So this is for Q4 and beyond. Slightly lower borrowing requirement, partly because of the TGA, the Treasury General Account, which is the Fed's with the Treasury's cash account held at the Fed. That's higher than what they thought it would be at this point. And that's currently sat at 886 billion. The Treasury expect that to be at 700 billion by year end. So essentially that's like 186 billion of cash to kind of run down. Mm-hmm. So you've got a pretty supportive and benign issuance environment throughout Q4, which is going to be supportive for liquidity. Obviously, you've got all the China stuff to come in. And then through that, we've got the debt ceiling suspension that ends in January, right? So essentially, once we get to January, unless that gets lifted, or pushed out further,
which it has to.
It will have to eventually, but it's going to be difficult to agree that whilst we're going to be in this transition phase to a new president, right?
Okay.
So nothing will get done, and then the Treasury aren't going to be able to issue any more debt to raise more debt. So therefore, they'll have to run down that TGA. So there'll be like 700 odd billion that they'll just be running down, and essentially that's an injection into the market. So going into Q1, on the assumption that we don't see the debt ceiling lifted, you're gonna start Q1 with a massive liquidity injection as well. So, and we're talking about Q1, that's only a couple of months away now, right?
Mm-hmm.
So we're running in that. So, you know, get the election out of the way. The liquidity picture in Q4 looks good. It looks even better perhaps going into Q1. And I think Bitcoin's gonna, well, perhaps it's already started to sniff that. And I think that keeps us running. And then maybe as we get to the end of Q1 next year, you might hear me feeling a little bit more cautious on the risk environment generally.
Yeah, well, we know you're mega bullish.
Yeah.
But like, you know, there's been a few people on the show who've kind of been a bit more like, yeah, we'll get the rally on Trump and then it'll get faded. I would say the options market is kind of sympathetic to that view. And the reason I say that is like, so we had this week, we've had a kind of test towards, we've broken 70K. We're pushing towards the all-time high around 72K. Usually when you're testing, when you're like approaching breaking out the highs, you'd expect calls to be quite well bid. You expect people to be like trying to play the breakout, lifting a load of short-dated calls. That call skew's trading at 10 vols plus, right? That's what you would have expected. Not at all, right? So I don't know if the options market is actually thinking, yeah, okay, Trump's getting priced in. It's a knee-jerk higher, maybe to 75, 80K, and then we're done. We don't need to really do much from there until we get a slow-moving kind of inflow, you know, all the inflows start kind of snowballing into the end of the year or even in Q1. So it doesn't feel like the options market expects 100K by year end, because if it did, you'd have much more of a call skew than you have actually got. So that would be the counter to that bullishness that I'm seeing, right?
I mean, and I might counter that with the fact that, like, yeah, I don't feel that there's any kind of euphoria in this market at all. I mean, we're breaking towards new highs, right? There's not a lot of euphoria. Again, really hard to kind of infer too much ahead of the election, I would say.
That's why we've pushed the podcast for next week so that we actually speak after the election.
And you might just see a big rush into all those things. But it takes, I guess, a brave person to kind of go and strap that on right now.
This week I caught up with Daniel from YieldFort. So he gave us his views around the market, the election, and also some of the products that he's trading over there. So check out what he had to say.
Hey everyone, welcome back. And today I've got Daniel from YieldFort. How are you doing, sir? Good to meet you.
Yeah, hi everyone. Yeah.
So why don't you tell everyone a little bit about how you got into crypto and what you guys are doing over there at YieldFort?
Well, I started my career in options area. It was 2008, and I spent
2008. That's a good time to start.
Yeah, 2008. Yeah, I spent more than 10 years as an equity derivative sales trader, and then around 6 years ago, started my journey in crypto. So last 5 years, I trade options on Deribit.
Nice. And you were trading at a Russian bank, is that right? Equity derivatives.
Yeah. The bank called Kit Finance. So it was top 3 banks. I mean, investment banks in Russia in 2008.
And so what is YieldFort exactly? Like, when did you start that?
YieldFort we started 2 years ago. Before YieldFort, we launched Delta Theta, and Delta Theta works, and it's like a options, decentralized options order book. But we found that it can be a little bit complicated from market fit from this point of view. So we decided YieldFort. YieldFort, it's like a marketplace of it's like a marketplace for structured products, and any customer can buy protection against volatility in Bitcoin, Ethereum, or Ton, or can obtain fixed yield. So it's just simple option strategy, but presented for customers in most common way, like without discussion about condors, spreads, or something like this. Just protection or fixed yield. That's all.
And the way you generate protection is by buying puts, and the way you generate yield, I guess, is by selling calls. Is that right?
We don't like to trade not neutral strategies. I mean, we prefer to trade spreads. It can be different type of spreads, like vertical or calendar spreads. We prefer to trade butterflies, and it depends of market condition. For example, so common story. The end of months means buy put options. So we trade very simple ways.
Sure. And do you in your sort of marketing for these products, do you kind of describe like where the protection kind of kicks in, or do you give like an idea of the strikes that you're trading and the kind of yield? Like, what kind of yield can you generate basically at the moment? Like what if I wanted a yield product on YieldFort, like what is up for grabs right now?
So we launched more than 1 year ago. It was August of the previous year. So also we got a license here in the European Union, like a virtual asset service provider, and we know that we know the group of customers, and these customers collect more than 10.5 times during participation in protection product. Yeah, because protection products looks like accumulation of underlying assets. Because if you got protection, it means you increased underlying assets. How it works? Every 2 weeks we have time for we have periods when you can buy protection, and this protection works during 2 weeks. So every second and last week of months, we compare expiration price on Deribit between these 2 weeks. And if price drops, our customers collect more underlying assets. If price go up, so they just with their funds. But during this year, we have customers, and these customers generate more than 2.5 times during this period in underlying asset, not in stable coin, in underlying asset.
So that's you're saying they've caught the sell-offs, which have enabled them to multiply their crypto by 2.5 times, basically, in terms of number of tokens that they hold. Is that right?
Yeah.
Is that what you mean?
Not clear.
So you're saying that the customers who have bought your protection product managed to multiply their crypto by 2.5 times? Is that right? Is that what you're saying?
Yeah, for Ethereum, yeah. Mm-hmm.
So that means that they've captured the sell-offs, basically, right? You're saying that would only happen if you've timed it in a way that when you've got the protection on, then the market has sold off, and then you've monetized that protection.
Yeah.
So that you've ended up with more Ethereum than you started with, basically, right?
Yeah, absolutely, yeah. But
right.
It's not actually it's not rocket science, and everyone can do the same and use absolutely free services. And just a few thoughts about it. As I mentioned, point number one, last week of months and first week of months, you have to be in put options. It's like a common way, yeah, without direction, just put options.
When you say you're in put options, like how much of your crypto are you actually spending? Like, let's say I hold 1 Ethereum token. Am I buying 1 Ethereum notional worth of puts, or am I buying more than that? Like, and how much Ethereum is it costing me to buy those puts?
Well, so it depends on situation, but I prefer to be in put at the end of months, like 130% of underlying assets.
130%, so a little bit more than. And what type of puts are you buying? Like, what delta puts are you buying?
30 deltas, 35 delta. So it can be like 35, 25, 10 deltas. It depends of estimation about market movements. Of course, the best case scenario, if you buy 10 deltas and so market will drop significantly, as it was during first week of August. But it's not a common situation, so I prefer to buy portion on 35, portion on 25, portion on 10 deltas, and then to see about market, and then to see on market condition, yeah. And if you see that, okay, a little bit slowly, a little bit not such dynamic, and of course, during summer we have low liquidity, and during these periods, of course, drops can be significant. During autumn, during winter, during spring, we have strong liquidity, and these movements cannot be so sufficient. Yeah, it's like a drop. 2 days ago, yeah, on news on in Wall Street Journal and situation in the Middle East. So it's just a drop and then buy, drop and buy. So
how do you go about deciding when to monetize the protection? So let's say you've got into some puts, the market's started to sell off. Like, when do you decide enough is enough I'm bank these now.
I'm trying to follow two simple rules. So rule number one regarding the dynamic of underlying assets, it means that second touch should be high. I mean, so we have a drop, then we have some kind of jump, yeah, then have a correction, and if we see that second touch is high, and we see on significant time frames like at least 4 hours, so with significant evidence, we can tell that this movement is finished, I think. And the second point, also, you can use analytics like Levitas. You can open 25 delta skew, and if you see that on day time frame skew, it's about like 15 or 17 or 14, something like this. It's like it's enough. Yeah, it means that put extremely high, and so markets stop.
So it's overdone. It's like an extreme in skew that you use as a signal that, okay, we're at peak panic now, so time to get out. Peak panic. So this is your discretion, right? You have the discretion of when to monetize the protection.
Yeah.
So if people invest in YieldFort products, they're basically backing you to optimize the trading end of that protection. Is that right?
Yeah.
Okay, I see. Okay, and then so I guess, do you post like your performance in terms of how well your products are performing anywhere?
So regarding performance, so as I mentioned, it was like a 2 point for Ethereum. It was like a 2.5.
Yeah.
In Ethereum, in the quantity,
which sounds quite good, right? Given that, I mean,
yeah.
What's the benchmark? So how much is Ethereum down? I guess Ethereum is lower over that time period, right?
Yeah, but Ethereum trades where it's not as stupid. It's like it's not as strange, but Ethereum like infinity wave, yeah, and without direction, and
range bound. You say it's quite range bound. Yeah. So you're saying ETH's been quite range bound, but by catching the downswings, you've managed to actually generate returns for your investors in Ethereum terms, basically. Yeah. All right, cool. That sounds quite interesting, that product. I mean, obviously there's lots of different looks and feels of those type of products out there, but it's interesting that you've got kind of discretionary tilt there that to manage that. So let's now sort of change gears to the market. Obviously, we're looking at a week out. We're at the election, the US election. Everyone's been anticipating. It's only a week away now, pretty much. Market seems to be having a little go at rallying again. Bitcoin knocking on the door of 70K. Hasn't really managed to break it yet, but I kind of feel like it wants to. What do you think?
Well, I think so. In general, I don't believe in any significant, any serious growth until we don't see, in general, in crypto, the change of conception, the change of concept. I mean, we need a strong new story about crypto adoption or about crypto development, or and I think it should be something related with DeFi on Bitcoin, DeFi in Bitcoin ecosystem, because last 2 years we don't see any DeFi development. Yeah, we just see meme coins or something like this, but we don't see significant adoption except for Ton, but in general. So my point of view that in general we don't see growth. We will be in a range. Yeah, of course, due to election, it can be, I don't know, 72, 75, or maybe 80, but then we will back to range. And my second point that before growth, we will see that MicroStrategy and probably Tether will have some kind of issues, and it have to be necessary condition for growth.
What do you mean? What kind of issues?
let's assume that MicroStrategy will lose all Bitcoins or something happen, or it's like a story. It's like a story about Binance or something like this.
So you're saying like a scandal of some kind?
Yeah, like a scandal, like seller is doing great job and very interesting, like hedge fund manager, buy sell strategy, MicroStrategy equities and spot and Bitcoin spot. Yeah, but on other hand, we have guys like BlackRock. They needed Bitcoins, so big story can be only if all strong guys will have necessary amount of Bitcoin. Until that moment, we will develop DeFi or something like this and play our small games in our small sandboxes.
Yeah. All right. So you're not thinking 100K happens by the end of the year like some people.
Yeah, I think so. But in short,
you don't think it will happen, or you do?
Pardon. I was.
Do you think we get to 100K by the end of this year, or not really?
So it can be just fast jump. Okay, probably, but it's not like we on one
sustainable, not sustainable.
Not sustainable. Yeah, not sustainable because it's not. We need more. We need more evidence. We need more.
Sure. I hear you. I hear what you're saying. There's not, apart from the kind of little rush of optimism, there's nothing concrete necessarily that's going to come out of the election, right? Other than just kind of general rhetoric that Trump is more crypto friendly. But what exactly is the driver for Bitcoin to go materially higher and stay there? I mean, the argument that people have got is that, you know, the election has been holding back a load of capital from allocating into the space. So the idea is that since the introduction of the ETFs, you've had loads and loads of people in the financial industry. Basically, they now have the ability to allocate, but they've just been waiting before doing it, right? So what are they waiting for? And one of the things they may be waiting for is the election result to come. And the idea being, okay, we've got positive liquidity environment from the likes of China, from the fact that the Fed are cutting. We've got a positive regulatory environment from Trump, basically wanting crypto to really, you know, help spur growth in the US economy. So he doesn't want to like freeze crypto out. So those things are your green lights that we're waiting for. And then people who are running whatever they're running, AUM, can now freely participate in crypto and allocate a percentage of their AUM into crypto. And it seems like that has not fully happened yet, right? So that's the argument. The argument isn't, yes, it's not a game-changing thing necessarily, but a lot of the money that wants to come in isn't in yet and is waiting for that final shoe to drop. That's the theory, I guess, right? But I don't know whether it's true, but I can see an argument for that, right? That does have some merit to it. And, you know, seasonally, we do tend to see the strongest periods in crypto into the year end as well, right?
Yeah.
So there are a few stars aligning for a bit of a charge, but it's funny because you're not the first person to say, yeah, we might get a knee-jerk higher to 80K, but then it just gets faded, basically, right? And crypto has got a habit of doing that. It's got a habit of getting people optimistic, sucking people in to a move, and then it's a bit of a disappointment. So, but I feel like we haven't really had the move yet. So it's like we need to break to new highs. Who knows how far we get? Maybe we get 80, 85, who knows? That'd be a conclusive breakthrough to new highs. And then yes, maybe then we're in a fragile place where we do come crashing down from that level. I think another factor we need to be aware of is the options market. The options, and I'd like to know what your view is on volatility and stuff as well, because you obviously do trade a bit of options in the YieldFort stuff. But like the introduction of IBIT options, in theory, should give the entire US retail options trading market the ability to trade Bitcoin options, which it doesn't currently have, right? So if suddenly some of the speculative activity that we see in tech stocks and call options in names like Tesla and Nvidia and and all these crazy tech names, if some of that money comes into punting crypto options, then that actually could actually fuel like some of these moves. Now it could fuel it in both directions, but what are your thoughts about the options market in crypto and in Bitcoin specifically?
You mentioned about very interesting comparison between tech stocks, and crypto. And the main difference between tech stocks and crypto that in tech stocks you have any points around this point you can build your strategy. What I mean, I don't know. You have quarterly reports. You have any kind of situations where price can be changed. Yeah, I mean, for example, quarterly report. You play around quarterly report, and you can build on this your strategy. In crypto, we don't have such points. We just have we open on Monday and decided up to 25%. Why we decided to up to 25%? Because we decided. That's all. It's just and now this situation, we see the situation during this year. So I think that, as I mentioned, until we don't see any sustainable change of concept, any ideas around DeFi, we will not see any direction. We will be in a range.
Right.
And it will
you
be...
sound like a seller of volatility then. You sound like you're a seller of vol. Yeah?
No, it will be simple trading, like, I don't know, buy volatility on Sunday, sell volatility on Thursday. That's all. It depends of course, it depends of situation around the market. Of course, if you see that on Friday something can happen, it's not a good story, for selling volatility. But in general, we have common sense that on Sunday we buy we buy volatility. Yeah. So
yeah, we do see a cyclical. Certainly for short-dated options, we do see a cyclicality in vol where vol gets crushed into the weekend and it bounces out of it basically. So yeah, I think taking advantage of things like that, phenomena that exist like that are quite stable phenomena, cyclical patterns in vol, that has probably been quite a smart thing to do. So yeah, I appreciate you flagging that. Actually, that's something that the viewers hopefully can have a look at and learn from that. That's like 1 week options generally, right? You're talking about. Yeah. All right, mate. Well, it's been a pleasure having you on the show. Thanks for coming on and giving us your thoughts around. Obviously, not quite as bullish and optimistic as some of the other guests we've had on, but good to hear a more well-rounded view. And appreciate you coming on the show. Thanks a lot.
Thank you, Imran. Thank you so much.
Okay, so what do you make of that?
Yeah, interesting. Joe, it makes you think. I know you're always having a go at me of this. I need to probably maybe trade around my positions a bit more. And like it's interesting. Like there's such good opportunities to enhance like the yield and return on just being sat there like long Bitcoin.
Yeah, I mean, he's saying he's basically done like 2.5x on the Ethereum, right? Via the like playing the down legs. And playing like the cyclicality within vol, because it's very cyclical, especially within the weekly vol, right, in crypto. So clearly trading those swings well and adding value to his clients, right?
Yeah. Yeah, and this is the thing, and this is obviously clearly your bag in terms of thinking around those things. And and that's the beautiful thing with options and derivatives generally. And probably as well why, we've spoken about with the ETFs and the approval of options trading on the ETFs, like that's going to be such a powerful thing for bringing the institutions in
and retail. I think it's going to suck a load of retail in as well, right?
Yeah.
People who might be punting around in perp futures that get massive leverage, or who aren't allowed to trade perp futures for whatever reason because they're not regulated in the US on various exchanges, they're going to be able to play around in super short dated IBIT options, right?
Yeah, no, completely. I mean, I think one of the things I would kind of disagree with what Daniel said when you were asking him about, he's talking about like there needs to be a new narrative or there needs to be a new kind of concept or user case in crypto. I can kind of see that maybe if we're talking about some of the altcoins and some of those networks. But I think in Bitcoin, it's easy to kind of overlook just how far we've come in the past year. You know, be it from like the regulatory standpoint. Obviously, you had the ETFs and what's going on there. You know, given
I think the fact that crypto became a battleground for the election, the fact that the likes of BlackRock are now, you know, promoting both ETH and Bitcoin, it's legitimized the space, right?
Yeah.
And that's a huge thing, right? You know, the year before we were like, okay, the SEC's coming after us. What's going to happen, right? That is a complete U-turn, right, in terms of regulation. And the fact that Trump's speaking so positively about it means that, you know, it could open up even more in the US. I think that's a massive narrative shift over the year, but it's not been like a sudden thing that's happened overnight. It's just the culmination of all of that over the year is a very bullish dynamic. But the point he was making about like no sort of new innovation or whatever, I think that's why ETH has suffered so much, right? And the relative performance between Bitcoin and ETH, because Bitcoin's narrative has been improving, right? Just because it's a macro asset that kind of gives you a legitimate way of hedging fiat currency debasement that has a place in people's portfolios, right?
Yeah.
But we haven't had like a DeFi summer. We haven't had anything to really spur Ethereum performance, and it's just dripping lower and lower. Like the relative value chart between ETH and Bitcoin looks disgusting.
Yeah.
Right?
But I think we had Michael van der Pope on a few weeks ago. And I think he made a really good point when he was talking about with the rate cutting cycle coming, that should spur more DeFi activity in terms of searching for yield. Like yield's just not, like DeFi yield's just not being attractive given this high yield environment that we've been in. So those rates start getting slashed, not just in the US, but globally. Then all of a sudden DeFi yields become more attractive. So then, you know, activity starts to pick up in the DeFi space, which typically is going to benefit ETH. I mean, ETH is still like trades like a dog, really.
Yeah. And there will be a catch-up trade in ETH, no doubt, right?
Yeah.
It's just I don't really see why I'd want to play that before the election.
Yeah, right. and I think like there's so many good networks out there with so much potential, and perhaps I think Daniel makes a point that, you know, maybe we need a new product that kind of just sparks like this huge use case, but I think that's sort of coming. These things take time, but certainly in terms of Bitcoin, in terms of its legitimacy as a macro asset. And I mean, yeah, if you told me 4 years ago that the presidential debate, you know, will put kind of crypto playing an important role within that, I, even as someone who's quite bullish, I'd be like, I'm not sure about that. And I know Trump says Trump things, but in this, yeah, if you know, Bitcoin was to become a US reserve asset, I mean, even I'm not bullish enough.
Yeah. Wow. Okay. What a note to end on. Well, it's funny because next week's show is after the election, so we will know who got in, hopefully, if it's not contested for another few weeks. And we've got Steph coming in from FRNT.
Yeah,
and would you believe he might be even more bullish than Dave? So
well, Stefan's going to be interesting because he's been in this space since like 2013. He's seen a few cycles.
Yeah. So I'm really looking forward to that conversation.
It's going to be a good conversation.
All right, guys. Hope you enjoyed the episode. Remember to like, subscribe, and comment, and we'll catch you back here next week.